Good morning, staffers. In our series of continuing to understand staffing financials, today we are going to talk about the statement of cash flows. You all heard it, guys. Cash is king. And today we're going to understand how that statement of cash flow is one of the most critical statements in terms of understanding performance, what our ability is to compete in the future, and what's going on in our business. And today we're going to dissect further the Adecco financial statements to find out what their cash position is and how they've been doing and how they've been spending their cash to help us strategize what we're going to do in our small business. So stay tuned. Here we go. Good morning, staffers. Today we're going to talk about one of the most important statements in a set of financial statements, and that is the statement of cash flows, because cash is king, and you have to know not only what amount of cash that's there, but how is it being used. Before we go into our videos today, I want to take this moment. I don't want you to miss a thing. Go ahead. There's a button at the bottom of your screen called subscribe, and I want to make sure that you catch all of our educational videos, that you have an empowered business. So please click that subscribe button now so that you can continue to get our videos. Anyway, let's begin. So friends, on my screen, I have the Adecco statement of cash flows. And these statements are readily available. They're Adecco's a publicly traded company, so you're going to be able to download these statements directly from the Adecco's website, and they do update these statements quarterly. So the statement of cash flow is probably the most important statement, I would say, in a set of financial statements, because not only does it tell you how much cash is there at a particular period of time, but it tells you how is this company spending the cash, and is it spending in a way that's really producing future revenues later on down the stream. And so these statements are part of the financial statements of Adecco. And the great thing about the statement of cash flow is it really breaks it out into three major components. You got your cash flows from your operations. So what is your operations producing in terms of cash flow? It shows investing, cash flows from investing, meaning in terms of what is Adecco spending their money on that they hope will bring future revenues later on, or what are they selling? What are they doing in terms of investing activity, and is this working for them? And finally, the last part is cash flow used in financing activities. So what debt are we bringing on that's bringing in cash flow, or what debt payments are we making that's reducing cash flow? And so these are the Adecco statements of cash flow. And how we start out a cash flow statement, just from the cash flows of operating activities, is we start with the net income number here. And so the net income is, in this case, 460 million euros, because Adecco is a European-based company and their financials are in millions. So 460 million euros in 2018 was their net income, 790 million euros in 2017, and 725 million euros in 2016. And what we're going to do in a statement of cash flows is we're going to add back. We're going to add back this non-cash activity. So like depreciation, where it's an accounting term, but it doesn't necessarily increase cash or decrease cash. We're going to add that back because technically those are not expenses from a cash flow standpoint. Goodwill amortization, again, another fancy accounting word, not necessarily adding to cash. But however, if they engage in activities like purchase a line of business, or that's going to bring in cash flow, that's not going to necessarily run through the income statement. So we need to make sure we're adding that back in there too. So what we're seeing on Adecco statements is based upon their cash flow statement from operating activities. So their day-to-day activities, their main part of their business, they're bringing in 727 million euros for this period. And 2017, they brought in 737 million euros. And then 2016, they brought in 694 million euros. So these were your operating activities, and they are their cash flow for their operating activities is bringing in an influx of cash flow. So that is a good thing for Adecco. Now, interesting enough, even though they're bringing in money for operating activities, they are spending money on investments. Yes. So they actually had capital expenditures. They bought assets of 158 million euros in 2018. And in addition, it looks like they purchased a whole nother division called General Assembly for 316 million. I actually looked that up for you so that you could see that. And I'm going to share my screen so you can see that part right now. But it looks like they purchased a new division in 2018 for $412.5 million called General Assembly. So this cost cash flow. This took away cash flow here. So, and we're actually seeing that here in the statement of cash flow. So I think that's pretty neat that you're able to see that. So going back to our statement of cash flows again, in addition to purchasing this division called General Assembly, they also sold a division called Beeline here. And I was able to pull that up for you on the web so we can take a look at it. But if we look at Beeline, it was actually in the news here. They actually sold their division, their investment called Beeline here. And again, you're seeing this on the cash flow statement. You're seeing real life happening on the cash flow statement. Isn't that so awesome? So you're not only seeing it, but you're seeing the dollar amounts that were being sold on the cash flow statement. So pretty neat how the cash flow statement is actually reflecting the reality of Adecco. So they're gaining this new division called General Assembly, which they're going to be using for training. And we're going to go into this detail in the strategy in the MD&A section of our video. But they're also diversing. So they're looking at things that aren't working and getting rid of that. But overall, and then they also acquired another division called Battery here for $77 million. So all in all, even though they brought in cash for their operating activities, they decided to take that cash and use it to invest in other ventures. So this General Assembly, this Battery, and they sold one of the divisions that just maybe wasn't working for them, that they didn't want to be in anymore. And so it had a cost for these investing activities overall of 344 million euros. And then the other part here is your cash flow from financing activities. So financing activities mean debt, increasing borrowings, that type of thing here. And here you're seeing there was a repayment of debt of 350 million here, as well as they had some, they gave out dividends of 350 million. So overall, Adecco ended up paying out 682 million euros related to debt. So they repaid 350 million of this debt, but then they went ahead and got new debt, right, of 135 million euro. And at the same time, interesting enough, they decided to go out and pay dividends. So the question is, if you're borrowing money and you still have debt, should we be paying out dividend? Do we want to be locking ourselves into these decisions like this? When we still have debt? Do we want to be paying out that much in dividend, or do we want to just go ahead and try to reduce some of our interest expense and get rid of that debt versus paying out dividend? Because it looks like, from their debt standpoint, they could have easily made a substantial reduction in debt had they just chose to reduce the dividend. Granted, shareholders might not have been happy, but at least you can kind of see what's going on. But financing activities pretty much took 682 million euros from Adecco's operation. So when I'm looking at Adecco's number, even though they brought in 727 million euros, they spent 344 million from the investing side, and then they spent 682 million on the financing side. And overall, they had a net decrease in cash of 285 million. So even though their business was working, even though it was producing operating income and operating cash flows, they were spending it on investing and on debt is what they were spending on. So it's amazing the information that you can get from a statement of cash flow. And here you can even see at the beginning of the year, they had $1 billion in cash. And by end of the year, they only had 718 million euros in cash. So they're experiencing a decrease of cash over time. So in 2016, they ended the year with $1.2 billion in cash. 2017, they ended it with $1 billion in cash, and now they're only at 718 million in cash. And so Adecco really needs to start thinking, do I really want to be committing myself to this dividend that's really taking up cash flow that I need, that I can use in my operations for later on? So this is a statement of cash flows. I hope this video was extremely helpful for you. Stay tuned. We are going to be going into footnotes next.